Hello there, it's Francis here from Generational Wealth Academy. Now on today's video, I am going to be sharing with you, how I use the Fibonacci tool, for trading the Forex market. Fibonacci numbers basically, are a sequence or a series of numbers that occur variously in nature. And some of us traders for, years have been using this to our own benefit, even in trading Forex. Now, what I am going to be looking at today is going to be a two-part series, which obviously means two videos. On today's video, I am going to be focusing on the use of Fibonacci retracements. Whereas on the second video, I'll be looking at Fibonacci extension or expansion, as it is otherwise known. Now, Fibonacci retracement, as most people are more familiar with, is good for identifying areas or levels at which to enter a move in the market which is already in progress, which basically means perhaps there's already a bullish move or a bearish move, and you are hoping that the price will continue in that same direction, and you want to know where to enter. That is assuming you missed the initial move. Now let's just basically, well, that is obviously, for retracement, but for the extension, you'll be looking to find out where, at what point to start scaling out of the market or to take profit, maybe take profit 1 or take profit 2. You want to know how far, the market would extend before it, basically stalls or retraces, well, before it stalls. Anyway, let's now go to the chart. Let me see if we can find. Okay, I suppose we could use this one. Let's see. Okay, on the screen now basically is the Euro Aussie dollar. Euro Aussie dollar on the 4-hour time frame. So let's assume, where you can see here, it's been more or less a bullish move. The market is now in a range, as it were, but before then there was this impulse move, and prior to that, you can see the price came down and more or less bottomed. You can say the price bottomed somewhere around there. So let's assume you turned on your chart and you saw this, and we're going to basically let's do this. Let's just basically take this bit out. Let's assume this area in the blue box has not occurred. Let's say we cannot say this. Let's just assume we cannot say that. So what you saw when you opened your computer or your MT4 was basically this impulse move, seeing it come now there. Bit yet. This bit in the box, retrace. It's now continuing to get you. This is I'm on an MT4 chart at the moment. So on the MT4, you would click on Insert tab and go to Fibonacci. You have the various options. We are focusing on the retracement today. In the second part, we'll be looking at the expansion. So you click on retracement, and then you look to draw from the swing low. The price was coming from to the low, so you pick it up and draw it, extend it to this bit. So let's take that magenta line off. So basically, you are drawing your fib levels from to the swing high. It's move. You saw the retrain. It's going to continue going up, so you want to know when to enter. So what you basically this level, the Fibonacci, is that the price said, but level. Then the next one, 61 point raised, 23 points up. So do is to look for where to enter the trade. Now, known edge of winning and would usually prefer the 50% mark, which is 2 lines below where it got past, the 50% mark, or even the next one, which is the 61.8, otherwise known as the golden ratio. But in this case, because it was the price did not retrace that deeply. It didn't get to the 50, neither did it get. Wait for the price to, it hasn't gone much deeper than this. There's nothing to say that even though it has gone up now, it's going to come back down. You know, you might decide to wait for it. Fine. Sometimes you would get a second chance, but some other times you would not get the second chance. So you might decide to enter after the price closes above the swing high, say somewhere around here, and hopefully you'll be able to pick up the rest of the trade. You know, what's an example of the price, you know, going as far as the 50% mark? Together, after all, like they say, you know, missing the trade is a lot better than losing the trade. So if it did not retrace as low as the 50% mark or the 61% mark, leave it altogether and wait for the next trade. What some other traders would do is basically, you know, enter a number of positions, you know, whereby, you know, they would place a buy limit at the 23.6 level, and then at the 2, or maybe to place their stop. One of those right for another day, perhaps, you know, in the first example, the impulse move, and we had actually got maybe somewhere here. By the time you turned on your MT4, you saw the price had swung from here, it had retraced, and it had carried on up, and perhaps it had gone to this high. It has gone to this high. In this particular case, it's a similar scenario as, you know, when it got to this high, you know, because it only retraced, as it were, almost as close to the 23.6% mark. In this case, it didn't even get there. What that tells us, obviously, is that it was a strong bullish move. If it wasn't a strong bullish move, if it wasn't a strong move, it would have retraced much deeper. But obviously, in this case, the bulls were not willing to even let it go further than that. You know, so in this case, you know, it would have been the same scenario. But let's go even further. Let's take it to the high, the highest high, as it were, and let's, you know, delete this. So you turned on your MT4, and this is basically what you saw. You know, this was the swing low, and then obviously all this move, you know, you saw all this move which had, you know, occurred. Now, what do? You know, so you've turned on your computer, your MT4, you've seen this, you've seen the price has gone this high, and it has been moving back and forth or up and down in a range. Would you still decide to enter? And if you're going to enter this trade, how would you enter this trade? You know, because this time, occasion, or here, it went past 0.6. Same thing here. Second time round, as far as the 38.2% level. And then even further, almost the 50% mark. So you can see it's like it's going much deeper. With each swing up, it goes even. This time it came here, swung up again to the 50% mark, or even the 68% mark, which is the golden ratio. Now, it is called the golden ratio, which means it's a brilliant opportunity for you to enter the trade. However, here and trend, you know, and strategies and techniques, even to be more profitable and successful in trading the Forex market. There are those out there who use just the Fibonacci tool for trading, or mainly the Fibonacci tool for trading. But I would advise that, yes, understand and begin to master how to use the Fibonacci tool, but definitely learn other things, other techniques that would add confluence to your decision-making process, as it were, before entering a trade. In the second video, I'll be showing you how to add other Fibonacci levels. Like I say, even here, we have 76.4. That was not originally part of my MT4. I added that level. So I'll be showing you how to do that in the second part of this two-part series. But anyhow, you know, basically, you know, the way to enter the trade, or a trade that you believe is going to continue in the same direction, is to wait for the price to retrace to any of these levels before you enter, before you take it up. You know, but I would say, you know, in this particular case, when the price first got to this swing high and retraced just below the 20, well, okay, not here, when the price first got here, and retraced just below the 23.6 level and it carried on up, I would have been comfortable entering the trade because this is indicative of the fact strong move. If it did not retrace deeply enough to the 50, even it tells us a lot. That would have felt very comfortable entering the trade. Even place my stop loss here. I don't mind, and at the close of this candle, plus somewhere here, 150. I mean, mind our time frame. If it didn't before, or well, it might not go. So I'll be comfortable there and looking to ride the trade. So in this skin, 150 or 160 pips for about 3. That is more or less better than a 1 to 2 risk reward ratio. Oh yes, more into that of this video. So just to round up, we've basically looked at how, to where or how or when to enter in progress. Obviously, there are other ways of entering the trade. We would also consider that in part 2 of this series. Looked at how and when to enter, where to place stop loss and so forth. I would say stay tuned and watch out for part 2 of this video. If you have not subscribed to my YouTube channel, please feel free to do that. That would encourage me greatly. Click on the subscribe button. Click also on the notification bell to begin to receive more videos from me. You receive notifications whenever a new video is uploaded. And I'll see you in the next video.